Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, February the 13th. Well, we got a breakout out of our two-day consolidation to the upside, obviously. Markets actually grinded higher, popped up, and kind of capped out about midday, and just started slowly grinding back down again into the close. Very, very slow move up, no volume. The markets have been relentless since January 1, obviously, and no volatility. It's just trying everybody's patience, that's for sure. And patience is definitely needed in this market. And I always say, when in doubt, cash is a position. So true. One or two trades can a day, a positive day, you have a small loss, but you could still grind out a decent amount of gains by being patient and taking the best setups. If there's nothing to be had, there's nothing coming across your screen, then obviously it's not your day. Take a step aside, do some research, get prepared for the next day. That's exactly what I always say, and that's what I practice, what I preach. So. But nonetheless, there is opportunity out there. The problem is that there's lack of movement in many stocks. So if it's not running across your screens, you kind of miss out. I mean, I see a lot during the day, and you just kind of, you have to be aggressively looking for stocks. Anyway, we have a couple of things, a couple of interesting charts I'm going to show you. Nothing really has changed. We are extremely overbought as usual in our indicators, but markets continue to grind higher. So that means that price is telling us that we are moving higher. And I keep saying that for the last 8 weeks, saying that if you don't think the price can move higher and this market can move higher, think again. And that's exactly what's happening. We hit our 1520 resistance area in the S&P. So our target, we're really there. It's about 1525, 1530 would be the first minor pivot. And then, of course, from there, we have a small one at 1550, and then, of course, the all-time high at 1575. Now, does it get up there this month? It absolutely can. I would not doubt it. I do think that there is some decent risk to the downside. And what scares me here is that everybody is complacent and everybody's buying stocks. And again, that's the help of the POMO. With the Fed buying treasuries, $84 billion a month in treasuries, so pumping liquidity into the market and keeping this market well bid up. And that's kind of scary that the Fed is actually doing that without letting some sort of a correction happen, and that's not happening. So just kind of be aware of that. Again, if you're a longer-term investor, it's not really going to really affect you that much unless you're willing to hedge yourself, or then again, if not a hedge, you would ride out any kind of sell-off. And the swing traders, again, guys, just be really cautious out here. Day trade is going to have no effect to it. So, but I want to run into some charts. I just want to show you the NYMO. Doing this 24 years, it's just unbelievable to see that here is what the market, the breath is telling you. Look at this. This is absolutely terrible. It really is. Anyway, you see we're up 2, down 7, up 6, up 14. This is terrible. But again, this is also saying to me that we can definitely move higher, right, without being fully overbought, or we can move much lower before we have a reading of really oversold reading. So that's something that I am always keeping an eye on, and I always like to bring that to your attention. Okay, now let's take a look at copper. Copper actually is doing very well, and copper is definitely needed for a market to move higher, and also to give that bullishness to the overall market, sort of checking under the hood. And copper is now consolidating in a bull flag pattern of the upper end of this trend line, breaking out of the symmetrical triangle, as well as the weekly chart. I don't have that here. We always like to look at our weekly charts sometimes at the end of the week and on Monday. But this is actually very bullish, holding well in here. If copper really starts to break out here and really starts to get going and takes out 4, which is a little bit of ways to go, but if it takes out 4, then you're going to, I think, longer-term picture is going to be a little bit more bullish. But it's just, we need some sort of a correction. It's definitely in dire straits of one. And I think that if the markets do push up and push up hard one day, I think you're going to have some sort of a blow off top here. I just don't think that the markets can continue to grind higher without some sort of a pullback. And I mean, a 4% pullback in the market, it's still going to be bullish. So that's what I'm looking for before I put on any swing trades. In the meantime, day trading is going to be my realm. I'm not looking for any overnight exposure at all in this market. Okay, so now let's take a look at, you got copper. Let's take a look at the U.S. dollar. And again, U.S. dollar here, our ratio chart is still trending lower to the S&P, right? That's what you want. A weaker dollar is going to put a bid in equities and commodities. Right now, remember the relationship eventually will change. Doesn't stay like that forever. But again, we have this little descending triangle, head and shoulders, so to speak, and the neckline coming in here at 79. So we're just kind of sitting here. So it's interesting to see if if the U.S. dollar is going to be bid up. Now, again, that's going to be some sort of an event risk happening, some sort of bad news happening. And that's really what's going to spark this market lower. Other than that, without any sort of event risk out of Europe, Asia, I don't think you're going to get anything other than the fact continue grind higher in the markets. Okay, let's take a look at the EEM, emerging markets. Now the EEM, and let me just bring this up a little bit more. The EEM is actually showing signs of weakness. I showed you this chart last week, but this is a bullish formation. This is a bullish falling wedge pattern. Caught the 50-day moving average, holding on to the 50-day moving average. You can see here's the flag, and here's your flag pole, and here's our ratio chart, EEM versus the S&P, of course. Losing momentum versus the S&P, but we are actually bounced off the 20 on the stochastic. So we are actually grinding high. So this is a bullish pattern. I'm really not too worried about it as far as the bulls are concerned. They shouldn't be too worried about it. If anything, this should bounce and get at least a retest or at least 50-60% of the move of this bullish pattern. Okay. Now new highs, new lows. This is a great indicator, and I look at this on a regular basis, but I try to kind of mix up the indicators to kind of show you. S&P down below, new highs, new lows. When the markets are in a bullish trend, right, when the markets are in a bull market, the indicator should stay above 100. And here it is right here. We're above 100, except this one little 2-3 day blip, and that was the election of this year. And we actually sold off. We ended up getting oversold, and then, of course, look what happened. The market went up. And as you can see here, tops, market starts to sell off. But even then, right, even when they're at your top, it stays above 100. So the market, we could still pop up and then still sell off to 1440, 1450 and still be in a bullish trend. So what I'm saying here is that, as you can see here, higher highs, higher lows, and we still have room before this indicator gets to extreme. So again, the NYMO, the new highs, new lows, and many other indicators I've seen are still overbought, but for the 2-3 day consolidation, it starts to unwind that overbought reading, so that gives us more momentum to the upside. So if you're short, I would not be looking to pick a top in this market. You're just going to be decimated with the account. So this is telling me that this has more room to run before we look to get short the market. I'm not looking to pick tops and bottoms. We want to get the meat of the move. So this here is telling me, yeah, of course we're overextended. Look at this. This is crazy. But we need to see our price move lower and then our indicators start to follow suit. Now, even if our indicators start to roll over before momentum is waning, how many times have I showed this? Showed many charts of a MACD stochastic. Oh, we have negative divergence just to be negated the next day. So really it's price. We need price to start to roll over before we can get aggressively short. And for that matter, you want to have a list of short candidates ready to rock and roll every single day so you know what you're going to instead of fumbling looking for a short while the market is selling off. Okay, now 10-year. Let's take a look at a 10-year. I mentioned this weeks ago on the breakout here. I said, watch the 10-year starting to gain a little muscle. I think the 10-year, I think the yield, which has been in a bear market for over 20 years, is over. I think the yields are going to start to rise again. Now, I don't think it's going to have any type of effect on equity markets for now. It's going to take a long time before the yields really get attractive, but the yields are rising. So let's take a look at that. And so, and the reason why is a lot of bond investors are coming out of bonds. So bonds are selling off, yields are rising, and where they're putting their money? Into equities, and that's where we have a bid in equities. Okay, now, this is the interesting chart. There's two interesting charts here. I've showed you the JNK, the junk bond, high yield bond index. This is the junk bond, garbage bonds, but they produce a high yield, total gauge of risk on. This is a great gauge to say, okay, just like the Russell, We have risk on, and look at what's happening, right? In November, after the election sell-off, and then sure enough, risk on, right? So what happens here? We grind higher every day, little, and then boom, we sell off. We take out the whole month of January, right, in just 4 or 5 days. That's what's going to happen with equities. It always does. We're going to grind higher for a month, 2 months, and you're going to have 4 or 5 days of a sell-off. It's going to wipe out the whole month, month and a half. That's exactly what happens. Fear is greater than greed. Remember that. Now, the reason why I point this out to you, I want you to show this. This is sort of a little bit of a scary chart here, and this is what I want to show you. This is the Russell correlated with the junk bond ETF, right? Look at this. This is look at the sell-off in 2009, and look at what happened here. Here, of course, small, lesser, and this is where we are now. So this is sort of a scary chart. Is it going to happen here? Is it going to sell off real hard? No. This is probably not going to happen anymore. The Federal Reserve is too keen on what's happening with the overall economy. All of the central banks worldwide are definitely going to be protecting their market. So that's not going to happen anymore. This was a surprise. But does the market sell off? I'm sure it does. But look at this, where we are here and versus here. This is exactly the same. Very, very interesting chart. So this is something to be aware of, to protect your portfolio if you're swing trading, and if you're, of course, you have position and some size out there. Very, very important. Use caution out here. This is an interesting, very interesting chart, and I'll keep you guys up to date on it. All right, let's just get into the charts here. Really, nothing has changed. We have a big choppy consolidation pattern for 5-6 days. 1 day up, 2-day consolidation, 1 day up. This is not a trader's dream. This is a scalper's dream. Right here. This is, if you're a scalper, this is a scalper's dream here. So terrible, terrible price action. Actually, believe it or not, since the beginning of January, but this is just February. Terrible price action here. Okay, spiders. We hit our target of 151 in our head and shoulders. As you can see here, we bounced off the 80, and we're just still kind of hugging around. But look at what's happening with the volume. We're grinding higher. Volume is not confirming price. Terrible, terrible. This is not good. And if you don't think volume confirms price, think again. No matter what, it might not be as much as it was before 2009, but volume still confirms price. And you can see here distribution days much greater than any other accumulation day. So keep an eye on this. As you can see here, yes, we did break out low volume. I think we had the lowest volume day. I think it was on Monday. It was the lowest volume day of the year. It might have even been yesterday now. Take a look at the 60-minute. I'm still looking at here support of 149.50 to really break down lower on a closing basis to kind of confirm any type of sell-off here. So we're still kind of hanging in the win here. But so let's just see. We're just grinding high. You can look at the 2-day consolidation on the 60-minute chart here. Very, very light volume. So again, overbought in our indicators. So we'll just keep an eye on what's happening. Not much to really talk about. But here's our numbers. 1475 is going to be our first downside target. I want to see a 1495 break on a closing basis. 1520 is resistance. We hit it to the penny, and we backed off a little bit. So now the 1520 will be resistance. This head and shoulders has been reached. Again, nice bullish pattern that we believe we saw this in December. CCI breaking back above our trend line. Nothing bad to say other than the volume and grinding higher here. Here's a 60-minute chart of the S&P, big bearish rising wedge. We did have our indicators starting to trend lower, and this was this consolidation area. And as you can see, as the markets just kind of chop around here, our indicators start to unwind that overbought reading. Now we're back up to this, not really fully overbought in a 60-minute chart, but again, slow grind up higher here since the beginning of January, and this is exactly what's been happening here. Terrible price action for trading. 30-minute chart, S&P. I said watch the Bollinger Bands. We should have a little bit of a breakout one way or the other, breakout or breakdown. And sure enough, we did break out to the upside. Nothing to write home about, but something to keep an eye on here moving forward. I really do feel it just. I could see it in the price action. I do see a larger move happening. I do think risk is to the downside in the coming weeks, though. I do feel that for some reason this is not actionable to trade. It's just my gut feeling from what I'm looking at during the day, price action, and what the market is telling us via the charts. Okay, same thing here. Transportation's holding up at the upper end of the range. Bullish, nothing to say about it, but I want to see a break of the 20 and then ultimately close of 102.50 again. That's going to be the break below lower. I'll be watching transports closely, as well as copper. Here's the diamond, same thing, guys, trading in this upside pattern here. We're at the upper end of the range. We're testing this high, so we could break now. We do have futures that are flat again. Every day the futures overnight, nothing's been happening. Very, very quiet. Risk correlated currencies, quiet. We started getting some momentum, and I do see that momentum starting to pick up a little bit in these currencies and the high-yielding currencies such as the Aussie dollar, the New Zealand dollar, the euro dollar. So keep an eye on them, too, for clues that either we're going to run higher or that we're going to start to sell off here. Okay? Next is going to be the IWMs, and I showed you the Russell versus the Junk Bond Index, ETF. And as you can see here, broke higher again, low volume. Very low volume for the last 3 days, but we are testing this upper trend line. So we're at all-time highs in the Russell, and if the Russell, if you don't think it can go higher, think again, because if nothing's going to stop this market unless sellers start to step into this thing. Otherwise, we're going to continue to grind higher. All right, let's take a look at Apple. We had our Goldman Sachs Tech Conference, and I said yesterday and the day before, I said, guys, this is just a trading stock for now. And what happened, they didn't say anything concrete about raising their dividend or buyback program. They did nothing in respect to Einhorn's lawsuit about freeing up that $1.34 billion in cash. Therefore, I said watch, because it's probably going to just sell the news, and sure enough, that's exactly what they did. And this here, all it was is just some sort of a bear flag right into resistance. And this is exactly what we have. Or you could even just call it a sort of a rising channel here. But actually call this more of a channel than a flag. But this is exactly what happened. So now, if we get back below this 558, then I think we start rolling down again. But Apple needs to say something concrete here. Otherwise, again, just a trading stock. Just stay away from it for now. And then this thing really has to capitulate in order for me to look to step in and look to start buying this thing, which we have not. We had 1 day here, 2 day of real big distribution, but nothing on the capitulatory side of things here. So again, just a trading stock here, so use caution. I wouldn't be looking to add to any position at this time. And then again, just the XLK, very similar to the Qs here. The technology sector is starting to look a little more interesting, but it is weak. It's still weak. It's starting to look a little bit better, but I'd like to see this come into the 20 period here, maybe down below into this area before I start looking at technology again. And same thing with the Qs. All right, guys, have a great day today. Retail sales is coming out this morning. That could be a market mover. Let's see what happens. Gives a good broad-based barometer of the economy, the health of the economy, all right? We'll talk to you tomorrow. Have a great day, everybody.